Hey everybody, Mark Yagi. Today is a big day. It's earnings day, and I don't like to be exposed during earnings too much. And so I want to protect my account. There's 4 days a year that you can protect your account. Those are on the earnings days. Now, I will say this is a MicroStrategy trade, and MicroStrategy doesn't really trade with earnings. But you know what? I don't know that tonight if things are going to be different. People are saying there's going to be this FASB thing on the accounting. I mean, the stock could go up 100, it could go down 100. I have no idea. What I do want to do is make sure that I give myself the ideal amount of probabilistic protection to the downside, because the risk to the upside is not as much as the risk to the downside. So there's an asymmetric risk going on. So you could see on my screen, and if you've been watching this since November 20th, this is about the 35th, 36th video, you could see on my screen that there's a huge amount of juice in these options that are the 330s. Now, the stock is at 344. Okay, so the stock's at 344. There's still $565 worth of juice per contract with 2 days left on them. That means somebody's willing to spend $550 to own these 330s. Now, obviously, if it doesn't close above 335, they lose all their money. If it goes up, they get to parlay that up higher. It's easy to see when you're out of the money too. Anyway, so you're going to see this. Now, how do I play this defensively? Well, you see that a few days ago I went in and I sold and got $1,535 per contract. I have 9 contracts. So a lot of that was juice, right? And I wanted to make sure that I protected myself at least down to 330. And I was thinking that today that it would go up and give myself in the money protection. It kind of did that. And I'll show you that in a second. Because right now it's gone from $1,500, which I got, and if I were to buy it back right now, I would have to spend $557. So I would have made $1,000 just in those 2 or 3 days that I've had the contracts sold, right? But it's still going to cost me $18,000 because a lot of this is in the money amount now. Everything but $5 is in the money amount. Well, that's great. I mean, I made some good money on the trade because I have to look at this column right here, this intrinsic versus what I got, versus these things, okay? Because my account has gone up. Don't forget, I have a base position that's gone up. Am I talking too much? Okay, let me get to it. Let me show you how I calculate the expected move so that I could protect myself to the downside. I'm not worried about the upside. I'm worried more about the downside. And I'm just going to try to go with the probabilities. So here we have the calls and the puts on the screen here, okay? The stock right now is trading $344, it's down $382, something like that. Okay. Now, what you do to figure out the implied move or the expected move, at least the way I do it in my system, is I take the at the money call, okay, and it's a 344.57, so the at the money is going to be close to 345. It's about $11.35, okay? $345 strike price, pretty close to at the money. Let's just, in our minds, put in 11 bucks, okay? Then you go to the at the money put, and the at the money put, the next one down, is going to be about, I don't know, somewhere between here. Figure another 11 bucks. That's $22. I add them together. The at the money put price plus the at the money call price is going to come out to about $22. Okay. Then I'm going to multiply that sum, $22, by 0.8. Just doing it in my head. It's 220 for 10%. That's 440 for 20%. So take off 440 off of 22, and it's roughly around 17.50, something like that. So I want to be at least $17.50 on the downside protection. Make sense? Remember that number, $17.50, 18 bucks. All right, so I go back to what is my call worth? Now, if it wasn't worth right now $17, I would roll down so that I would get some more in the money amount so that it would be worth $17. But it's worth $20, okay? So I've now, if I were to sell this and roll deeper or do whatever, I mean, I don't have to. I'm kind of exactly where I want to be. This is the one I would have chosen. I would have said, hey, Mark, today's the day. You got to protect the account. So pick up, $14 worth of in the money amount, 330 minus 344, where the stock is, plus a little bit of juice, which is 570 or something like that, okay? Add that together, you come up with about $20 or $2,000 per contract. So I'm pretty good where I am. The question is, if you have MicroStrategy, are you protecting yourself to the downside? Let me explain the thinking behind this. You can do whatever you want, obviously, because I can't watch you. But at the money, let's just take a look at them. I'm just going to put this back to the calls because we don't really deal with the puts so much here. So let's just make this all calls. Calls, boom. All right. So now I've got the calls. All right. If you go at the money, right around the 345s, okay, you can pick up $1,122 in juice per contract, okay? That's pretty good. It's a 2-day contract. Look at what the covered call return does, that if you can do this over and over again and multiply it by the number of periods that we just did, which is 2 days, you get $500. It's a ridiculous number, and it's not exactly accurate because it's too many multiplication times this year. But if you look at it and you say, all right, I'm going to make $1,125 per contract, going right at the money. Cool. In 2 days, this is going to be zero. There's going to be no juice left. Now, the stock could go up. If the stock goes up, you're going to still have no juice left. That's all your money. You get the $1,161 or whatever it is. No matter what, that's your money. Let's say the stock goes up and you sold those 345s and you got $1,167. Let's just say it goes up. It goes up to the 350s. Well, you're going to have to roll up, $5, but your base position will also have gone up $5. So those two net out, and that means you got to keep this juice. If it stays exactly the same, which is probably how you have to figure everything, you end up collecting $1,161 in juice. Okay? You're always going to collect the $1,160-something in juice. You're always going to get that. If the stock goes up $100 to 340, from 345 to 445, okay, you're going to have to pay $100 to roll up because you're going to have in the money amount, but your base position just came up $100. So those two net out. So when you do the math, you realize you're always left with the juice. And that's what we're in this for. If you're focusing on what the stock is going to do, you're focusing on the wrong thing tonight. Now, if you're focusing on what the stock is going to do to the downside, because I know a lot of you are sitting there going, but it's MicroStrategy. They could go up $100 tonight. Yeah, they could. They could also go down $100 tonight. It's that kind of company, and you know it. And so if you're sitting there going, well, how do I protect the account? Because the risk is if the stock goes down. If it goes up, there's no risk. I just showed you, right? You just do the math. It goes up 100, you lose 100 of working capital, but you gain 100 in base position value. So those two net out, and you're left with the juice. But what if it goes down 100? If it goes down 100, your base position goes down 100, but you've only collected $11 in juice if you're at the money. But what if you go down to the 330s like I did? Or the 320s? Or the 310s? Well, let's look at the 310s, just so you can see the numbers. You're only going to pick up $174 a contract in juice. That's something for 2 days, right? You got 10 contracts, that's $2,000, okay? But you're going to get this in the money amount. Look at how much that is. It's $3,297 in per contract, or $32.97 per share. In other words, the stock could go down $32.97. Actually, it's up in here now because that's the last trade. It's 36 by 3,700, right? It could go down $3,600 a contract, or $36 a share, or down to 310, right? And you haven't lost any money, right? You haven't lost any money. So you're protecting yourself to the downside. You're not getting much juice all the way down there. But if you go to the 330s, like I just showed you, it's 500. So that's the mentality of how I look at this. All right, let me boil that down. I'm talking a lot. Upside, if you sell out of the money, you get some juice, and you get the upside. At the money, you get more juice, because that's where the most amount of money is made in juice. At the money, you get more juice, but you only get the protection to the downside with the amount of juice. And if you go deep in the money, you get in the money protection, okay? And you get some juice, right? So that's why they're options, because you have all these choices. So what I'm going to do is tell you what I just did. I just showed you what I did, and I haven't done anything because to me right now I'm in a pretty good spot. I'm $15 in the money at 345. I get the 330s, okay? $15 in the money. I'm happy with that. And I got $1,535 in juice, and now all I just have to do is wait for the next 2 days to go down, and I'm protected all the way down to the 330s plus the juice I got. Make sense? Protect yourself tonight. That's the biggest thing that I teach people, is that you've got to protect yourself going into earnings. Don't expose yourself. If you do, these are the days that you wish you had if its stock goes down, because you got to dig out of that. On the other hand, if the stock goes up, you're going to be like, oh, I wish I hadn't gone in the money, because the stock, I would have made so much more money because it went up. But you don't know if it's going up or down. I don't know if it's going up or down. Okay? So you got to play the odds and the probabilities. The probabilities are the risk is to the downside. So protect the downside. See you on the next video. Hey, it's Mark Yagi, and if you haven't subscribed to this channel, please do that right now. That would be a great favor to me, and plus it helps me get this material out to a lot of other people that might need it. I've got a little bit of a movement going on here, and I want to try to change the world one person at a time, showing them that you can make safe, reliable income from the stock market. And plus it helps to grow the channel a little bit. Also, if you would give me a thumbs up on the video and like it, great. If you don't like it, give me a thumbs down, that's cool. But just tell me why you don't like it so I can get better. And then hit the notification bell so you can get these videos as soon as they come out, because a lot of times this is timely information and you want to get that information before it gets stale. The last thing is to join my free Insider Tips newsletter. There's a link below, and you get everything in one spot. You get breaking news and analysis also. So that would be great if you could do that too. See you soon.